everyone. My name is Ernest Cooper with Cooper Realty, talking to you from Cooper Realty headquarters in Northwest downtown Portland. I am pleased and greatly honored and humbled to have the amazing Jennifer Kelly here with me. On your screen, it might be over here. On my screen, it's over here. Jennifer and I have worked together for, Jennifer, I think 15, 16 years.
Yeah.
She has worked through many purchases for Scott and I and many refis. And I honestly feel and believe in my heart of hearts that Jennifer Kelly is the best mortgage broker in the entire area. Jennifer, you want to introduce yourself?
Well, thank you very much. I'm Jennifer Kelly. I am a loan officer with Guild Mortgage in Lake Oswego. And just as a little bit of background, so Guild Mortgage is structured to be a direct lender with Fannie Mae, Freddie Mac, Ginnie, all the big players. But we also have the ability to broker loans. So we've got a good feel for what's happening in multiple spectrums and parts of the lending market right now.
Great. Thank you, Jennifer. I really appreciate it. I have a series of questions for Jennifer so we can basically inform you of what's going on, or she can inform you of what's going on in the residential loan market in today's interesting times. And boy, did it change in a matter of days. Jennifer, the big question on everyone's mind that I'm sure you already know what's going to be coming out of my mouth, I'm hearing it on, or listening or reading it on Facebook, is forbearance. Any words of advice? What are you seeing in your line of work and what are you hearing?
Yeah, so forbearance is basically the willingness for a lender to allow someone to stop making their mortgage payment for anywhere from 3 to 6 months. And my first things first, I would always tell you that if you are able to make your mortgage payment, continue to do so. Absolutely do not do the forbearance thing unless you really, really have to. And the reason for that, there's a few actually. So forbearance is not the forgiveness of your mortgage. It basically just presses pause so that you're not going to be faced with late mortgage payments on your credit report during that specific time frame. The bummer about it, so to speak, is that you still have to make up those payments at some point. So every lender and every loan program is different in that respect. So you're never going to be able to get a straight answer from your friend. You need to speak to your lender about what that repayment will look like. But there are times where it's just expected that you'll pay it back very promptly once your payments begin again. There are times where they'll just work out a payment plan for you to catch back up. There are times where they'll extend your loan life by, let's just say, 3 months, if that's the amount of time you've taken off of payments. But in any case, you will need to pay that money back, and interest will accrue during that time. So it's not just a freebie. You have to be prepared to catch back up.
Well, I'm seeing on Facebook from other lenders that are friends on Facebook that it will have a negative impact on your financial history. It might not have an impact on your credit score, but it will have an impact on your ability to purchase a home in the future, right?
Yes, and that is what we're starting to see already. So the bottom line is this: when you apply for a forbearance, your lender is required to report that to Fannie Mae or Freddie Mac or Ginnie, whoever owns your loan. So even if you decided to stop forbearance and start making your payments again, those entities have been notified. And as a result, they won't purchase a new loan that we do for you for a period of time. They have not made a very formal announcement yet as to what that really looks like. We're hoping they'll do so in the very near future. But it could be that you have to wait 12 months and make those 12 months of mortgage payments on time before you can refinance your mortgage or buy another property.
Interesting. Any final thoughts on this particular subject before I go down my list of questions?
I mean, the bottom line is, I think it's important, like I said, to make your payment if you can, and do the forbearance thing only if it's truly your only option.
Great. Good words of advice. I usually follow Jennifer's words of advice very closely. I've learned my lesson. And that goes personally as well. So Jennifer, I heard that there's no longer any jumbo loans, that dried up right when the loans started going out for all the small businesses and everything. First of all, explain what a jumbo loan is, and the loan limits, and conventional versus jumbo, etc.
Sure. So in the Portland metro area, a jumbo loan is defined as any loan amount, not a purchase price, but a loan amount that is greater than $510,400. So anything larger than that would be a jumbo loan. Right now, and this really started like the beginning of April, there are very, very few jumbo lending options available. And it has nothing to do with the fact that you've got great credit and a solid down payment. It's just literally that most of those jumbo lenders have closed their doors temporarily to new applications. A lot of that is because of this COVID turmoil, obviously. They just don't know what the long-term ramifications will be. There's a lot of concern about liquidity and people not making their mortgage payments and what that does to the lenders. So they just haven't known where to price things and what the true risk really is. And as a result, have just decided to stop taking new applications until things are a bit more clear.
Okay, all right. For those of you that don't know this, Jennifer's husband is a loan officer with Guild as well. And one of my brokers works with Mike Kelly and was telling me that in the past couple of weeks, he was working in a jumbo loan and it unraveled and Mike was able to fix it. Jennifer, what are the fixes to, what are the alternatives to a jumbo loan?
Yeah, so the good news is that for some people, we can do what's called a combo loan, which means that instead of doing just one big jumbo loan, we can divide that loan amount into two separate mortgages. So you've got one that potentially could go as high as $510,400. And then you couple that with a second mortgage that kind of finances the rest of what you're trying to finance. So those programs, those combo loans can go up to a maximum of 95% combined loan to value, which basically means that those two loans added together can finance up to 95% of a purchase. But they also have some limits as to how big that second mortgage can be. So it's certainly an option to do that for some loans and some borrowers, but depending upon how much you're trying to finance, it might not be the right fit. So it certainly has helped us in several cases the last couple of weeks, but long term, we need great jumbo options too.
Got it. So the big picture thing, from what I'm hearing, I'm going to repeat it back to you in English, is the combined two programs will be 95%, and then you have a minimum of 5% down.
Right, exactly.
Okay, got it. Well, that leads to my next question. Oh, wait, do you have anything else you want to talk about in regards to that particular subject?
So with the jumbos, it's just a matter of time, I think, before they start to re-enter the market. We do have one jumbo investor who has come back. It's not the most ideal pricing or rates, but at least it's an option. And hopefully over the next several weeks, we'll see more and more of them re-enter the market.
Okay, awesome. Well, that does lead to my next set of questions, and that is, down payments, credit scores, etc. I think that I've heard you say that the credit market is tightening. You might have to come in with a larger down payment than previous. And then ultimately, I want to have a conversation about this topic of, after the Great Recession, the lending market was so tight. And then it was like a pendulum. We knew it was going to swing this way. And it had started to get like right over here when COVID hit. And now it's tightening back up again. Okay, and it's going this direction. So ultimately, do you feel that it's going to start to swing back? And if you want me to repeat all of that, I can.
I think I got it.
Okay.
So you are absolutely right. After the last big recession in 2008-9, we saw some major tightening of lending guidelines, which in my opinion was good. It needed to happen because things were just too flexible. So with that, this COVID situation, in my opinion, is not the same. We have seen lenders tighten up some guidelines, especially when it comes to government loans, FHA and VA. So credit score requirements have come up a bit. Like on FHA and VA now, you need a 600 as opposed to a 580. On Streamline FHA refinances, that score has bumped up to a 640 for us. So there have been some changes. I would say that they're not overly restrictive or overly conservative, but they are a bit different. So yeah, there have been some updates to guidelines. I don't know how much longer that will continue, or if it will continue to get more and more conservative. I think that there's a lot of unknown with the implications of COVID and exactly what that means to our real estate market. There certainly have been some changes with regard to like verifying a borrower's employment before we fund a loan, because
Oh,
so
yeah.
many people,
Can
yeah,
you speak
so many
about
people are
that,
being
about what's
furloughed.
happening?
Yeah, obviously a lot of people have either lost their jobs or been temporarily furloughed with no income, laid off. So we're trying to be, we have to be very careful and verify that people are still actively employed and being paid before we fund their loan. So it used to be that we would do a verbal verification of employment prior to funding, but we had anywhere from 3 to 10 days prior to the closing date to get that done, depending on what loan program we were using. Now we are requiring, and this isn't a Guild thing, this is a Fannie and Freddie requirement. We are making a phone call 24 hours before we fund that loan. So those verifications are right before we fund, as opposed to several days before we fund. So we just have to make sure that people are still able to make those mortgage payments.
Interesting times we're in. Actually, Jennifer, that actually happened with one of my broker's buyers. They were sitting at the closing table, signing their loan documents. And one of the buyer's bosses called and said, somebody just called to verify your employment. I mean, so just right then, while it was happening, the employment was verified.
Oh, good. So it didn't result in them not
No,
getting their loan.
no,
Okay,
they,
good.
they still had it. They still had a job. Yeah.
Good, good.
Well, thanks for that information. Now, look into your crystal ball. Dim the lights and light the candles and all of that good stuff. Do you have any interest rate predictions?
Oh man. Well, what I will tell you is this: since the first week of March, interest rates have been very volatile. We saw, again, when COVID became a big thing and we knew it was going to hit our local world really hard, there was a lot of fear, a lot of reaction, and both the stock market, the bond market, mortgage-backed securities markets, everyone reacted big time. So we saw this, big drop in rates, then we saw this huge spike in rates, and since then it's been a bit of a roller coaster ride. It has calmed down a little bit, but again, the markets respond very emotionally to things, especially when there's a lot of unknown. So if, for example, there's another wave of COVID, in the fall, or if there's a bigger loss of employment than what we really anticipate seeing, or if there's some other implication that becomes something on our radar, that will definitely have an impact on rates. I think that rates will continue to stay low. They're very, very good right now. I don't foresee them popping up, but anything can happen. So I would say for those who are in the market to purchase a home, take advantage of the rates. I mean, they are fantastic. Don't get greedy and wait. They are great. So get out there and look if you're in a position to do so. And if you're refinancing, kind of the same thing. I've got people who are kind of on the fence and holding out for specific rates, but they're so good right now. I hate to see people miss an opportunity. So
yeah.
Fingers crossed.
The thing that I always say to our buyers when it comes to interest rates and locking, and that is, if you want to start practicing legalized gambling, go for that, lock now, don't lock now. And once you do lock, don't look back.
Right.
And as a little bit of a side note, but we're kind of on the topic of interest rates and the recession, or not, we're not in the recession yet, but a client of mine reached out to me a few weeks ago and said, could you please research how a recession, what the recession impact is to the residential real estate market? And I had to put on my thinking cap and calm down and sit at my desk and research stuff for about an hour to 2 hours. And the United States economy, from when it was been tracked by the federal government back 200 years ago to date, we've had a lot of recessions. It was astounding how many recessions we have. And another thing that I learned was how short they are. Sometimes less than a year, sometimes a little bit more than a year. What I discovered was there were only 2 times that the economy had a negative impact on appreciation. And that was the Great Depression and the Great Recession. In all other recessions, the real estate market appreciated between 1.3 and 3.5%. Why? Because the federal government during a recession lowers interest rates, tries to stimulate the economy, buyers take advantage of that, and real estate just perks right along. Interesting, huh?
It is very interesting. I think it's one of those investments that over time, I mean, it will, there are certainly some ups and downs, right? But over time, it's a good investment to have in addition to other stocks and bonds and other things you might have in your investment portfolio.
Right. We're almost done. My last question is, any parting words of wisdom or advice coming from the great Jennifer Kelly?
Let's see here. I would just say that overall, I think that it is still an excellent time to purchase real estate. I don't just say that to be salesy and try to encourage people to do things they shouldn't do. I truly believe that. I also think that what I've witnessed is if you're trying to sell a home, it's a great time because there is not a lot of competition. There are a lot of people that are waiting. And normally springtime would be a very busy time for homes to be coming onto the market in preparation for, moving before school starts in the fall and all of that. So I think for those who are thinking about selling their home, now is a great time to do it before there's a huge flood of all those people that have been waiting, because that will come. It's just a matter of when. So get ahead of it because I think you can do well right now.
I would happen to agree. Well, everyone, that does it for the Cooper Realty Power Hour. It's less than an hour. I'm going to give you Jennifer Kelly's contact information if you want to reach out to her, if you need lending needs, or you just want some questions answered about the lending market. So to get a pen and paper, her email address is jen@jenniferjkelly.com. Don't forget the J. I often do. And then her phone number is 503-701-1035. Once again, 503-701-1035. Jennifer, thank you for your time this morning. I really appreciate it. And I really appreciate your guidance professionally and personally. You're wonderful.
Thank you. Thank you.
Bye now, everybody.